Welcome to the Wealth Studying Podcast. This is episode 485. Today is August 3rd, 2025. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Today I got a quick thought-type episode for you. And I don't plan in this episode to talk about any specific investment or stock or even a strategy, but to point out the risk involved in investing and specifically in things that people think have less risk. Now, today in this episode, I want to point out that Warren Buffett's Berkshire Hathaway has announced that they're writing off nearly $4 billion in losses from their stake that they have in Kraft Heinz. You're probably familiar with Kraft Heinz. They're a conglomerate of America's best-known brands, food industry, packaging foods, everything from obviously Kraft branded products and things like Heinz ketchup and condiments, but also the Kool-Aid brand, Jell-O, Oscar Mayer, Lunchables, Velveeta, Cool Whip, A1, Philadelphia cream cheese, Crystal Light. Listen, the list goes on and on, even Grey Poupon. And not only has Berkshire Hathaway lost nearly $4 billion, or they're writing off $4 billion this year, but if you go back to pre-pandemic around 2019, they wrote off around $3 billion back then. So you're looking at a $7 billion write-off in a period of about 6 years in what normally might be considered a pretty rock-solid, oligarchical type brand with big moats around it and huge consumer, name recognition and sales and cash flow. That if Berkshire Hathaway, with their immense knowledge base and staff, if they can still lose money in the stock market, believe me, you can too. Nothing is a sure thing. And I want to touch on something else, 13F filings. In the next weeks, you'll be hearing a lot about what companies or individuals or large investors have either bought or sold positions. And that'll make big headlines, and it'll cause people to run out and either sell things that have been sold by these investors, or people will rush in and buy them because, the likes of a Berkshire Hathaway or Nancy Pelosi's husband has supposedly bought a stock. These are all released in 13F filings. Now, there's a lot of minutia in 13F filings, specifically for the reason that they're stale news. 13F filings are required to be submitted no longer than 45 days from the end of a quarter. Okay, so when you see these headlines, and this is not so much about Warren Buffett because he does tend to hold his positions longer term, but specifically on these, influencer type ETFs or these blog sites that supposedly follow secrets of 13F filings from politicians or from hedge funds. Listen, they're mostly nonsense because a lot of that money is fast money, right? They get in, they get out. If Nancy Pelosi's husband gets some insider hot tip, he buys or shorts that stock. And then a week later, 6-7 weeks later, when the public gets knowledge, he then closes the position. So yeah, it's reported in a 13F, but the money's already been made. In the next couple weeks, these 13F filings will be coming out. And think about it, they can go all the way back to transactions that took place on April 1st. Right? That's more than 130 days. That's nearly 4.5 months old. 13F filings are mostly stale news. Now, having said all that, in a couple weeks, when Berkshire Hathaway's 13F filing is released, you will likely hear me comment on it. Not because I'm going to either rush out and buy or sell whatever changes has been made to the Berkshire portfolio, but I'm looking for overall trends. And again, this goes to the nature why 13F filings are mostly, as my Italian grandfather would say, bullshita. In Berkshire's first quarter 13F filing, they requested discretion withholding the disclosure of a particular stock that they were investing in. They did it for strategic reasons. So again, this just goes to show you that if there is any juicy information to be contained in a 13F, that the fat cats are going to protect their positions and find a way to not tell you about it. Listen, it's a big club and you're not in it. So don't try to be. Don't take your life savings of $1,000 and throw it into some stock because you hear a hot tip from a 13F filing. Oh, back to the upcoming 13F from Berkshire Hathaway though. I am interested to see what undisclosed stock they're purchasing And what's really caught my attention is that we know it's in the industrial sector. You know that I've been a big believer that growth is moving out of just the big hyperscalers and technology in general and migrating to the applications and the nuts and bolts of the economy that use technology. So I'm calling that industrial technology. And I'll be curious to see what within Berkshire Hathaway's portfolio might be moving in that direction. And if it does or doesn't, I probably won't make a big deal. They are already heavily invested in domestic industries, especially on their private equity side of the ledger. Well, hey, in any case, we'll have to wait until those 13 Fs come out. Until then, as always, this is John Pugliano wishing you the very best returns.